All right, folks, let's go ahead and get started and talk about Disney. I really want to use a strategy that we typically use going into earnings. It's a little bit different than most, but you can see that it's done really well over the last 2 weeks, where we have not only made upwards around 500%, but we had traders today making close to 1,000% on TTWO. And so I wanted to discuss this with you and do it from a supply and demand perspective. This right now, I'm using Trading View. Okay, I have my indicators on both Thinkorswim or Trading View, and you can see those at my website at trendytrading.co. Right now, for these purposes, I have my indicators turned off, and I want to talk about demand and supply. So the first thing that I do when we come into earnings, obviously, we want to pay attention to implied volatility over on the option side. Okay, so the first thing I'm going to do is come over here and look. And today's implied volatility is about 110%, plus or minus an $8 move in Disney is kind of what they're looking for going into today. All right. I want to work myself from a higher time frame into a smaller time frame. I need to get the bigger picture. Okay. So the bigger picture when we look at the weekly is obviously down. Okay. You can see that all the way from this peak high around 203 into current price, which is trading around 101. We want to measure that. We'll go ahead and grab the measuring tool. We'll come from the peak high into, let's see if we can open this up just a tad here. And we came down to about right here, which is, you can see about a 55% decline in Disney. So something to just take note in. As far as trend is concerned, we can easily identify the immediate trend by using the last 2 to 3 pivots, if you like. And how you do that is visually, you could see them. It's pretty straightforward. We have this pivot here. We have this pivot here. That would give us two lower highs. Okay, so this is a lower high. Okay. And then over here, we are making from current price, we'll use that pivot to this pivot here. Okay. And we have higher lows. Okay. When we have lower highs and higher lows, this equals, that's right, sideways trend or chop. Okay. So we're in chop. The overall trend itself is down. You guys can see that straight down. Okay. And then we are going to jump into formations. Remember, I have these videos on the YouTube page here, and they're very short to the point. And if you have questions, you guys can come out and talk about, ask me questions or whatever it may be. But I'm looking at candle structure. I do not need to use volume or anything like that. Volume is something that actually comes with the size of the candles, right? So it makes sense. Like, for example, this candle right here would have a lot of volume behind it. We don't need to turn on a volume indicator to tell us this, okay? The formation, notice that prices move. Here we have this really nice move, but then we have a topping wick. That's another video that lets you know, I think that video I put out, it's probably under 5 minutes. And the topping wick is one of the first indications that we are about to reverse in trend. Okay. So this inside candle then gets followed up by a down, gap down candle. This is considered an inside and down formation. Some people can't see that right away because of the gap. It kind of confuses them. So what I was taught a long time ago, one thing that you could do is actually just draw in this candle, if you will, just to kind of give you the effect to understand that this is pretty ugly. Okay, so we fill in that gap and you can see that the inside and down formation happens to come right out of there. Okay, so the first thing we want to do is we are going to identify this supply zone. We're going to come right here. And on my settings, I already have these templates that are in here. And that's what I love about TradingView is that all these are set up. So it really reduces the time that I need to write things in. The next thing I want to do is just kind of bring my target just here. All right. And notice that I can hit target and it's going to say target there. And here's a little trick in case you guys didn't know this about TradingView. We're just going to click here and then hit control and then click again, and that duplicates the line really quick. I love that. All right. So here's a supply zone on the weekly. All right. So this is where I would expect sellers to show up. All right. I want to know, has this supply zone been tested since it was made? And at this moment, um, I came down a little bit, so you could say that this candle came very close to testing it, but I would have to say that this is a fresh zone. So if price were to, for some reason push up into here, I would expect it to reject, but I'm not going to fade it just because. Okay. So just understand that. So if we were to take this trade to the upside and we get into supply zone, really at the end of the day, what I want to see is as long as 117, which is right there, 117.27 holds, we continue to ride the trend up into supply. Okay. We won't go into all that. This is the supply zone, and now I want to be looking for a demand zone. All right. And, first things first, what I see is a double inside and up. Let me go ahead and remove these out of the way for right now. And this right here, folks, this is from a long time ago, so we're just going to remove that. We didn't quite make it down there. Okay. So your double inside and up is here. I'm going to zoom in so you can see that. So this is what I would consider the initial candle. Notice that price did close within that candle, and this price also closed within this candle. That is then considered an inside and up formation. Okay. So what I'm going to do is I'm going to use the lows over here. I'm going to come up underneath that formation, which is right there. And let's make it about the same size, about right here. And then I'm going to call this demand, just like that. And then I'm going to bring this just above. I'm going to click on that, hit control, and bring that down. And now I have two opposing zones. So far as the weekly is concerned, I have a supply zone that is at 117 by 127. Current price is 101. All right. So again, let's go ahead and just put these numbers in here. Although you can see them up here. A lot of people ask me, like, what is the easiest way to kind of see the targets and what they're associated with? Because it can be confusing if you have these turned on. There's a lot of different numbers over here. But in my mind, it's actually pretty straightforward. So you see the top white line, the only thing that I've used on this chart happens to be this bubble here that says 127. And then the next white line would be underneath 127 at 117. Okay. And then down here, right, we would see that these lines, 96 happens to be the first white line. This line right here is your next one, which happens to be at 89. And then these guys down here. Let's go ahead and take these off just to reduce the noise. Okay. This is an old stop. Okay. And this is what we're left with. So this is the bigger picture. Immediate trend sideways, bigger picture. These are two opposing zones. Price has come down into demand several times to find buyers over the last several weeks. You can see that we found buyers here, we found buyers there, and then on the third attempt there. And matter of fact, this candle also. So let me zoom in just one more time so you can see that. And so we have a demand zone that was created over here as well. Price came in here, price came in here, price came in here, and then here, and actually created another zone. I like this area right here for support. So that's the first thing I want to kind of take into consideration. The next thing is these two opposing zones. So supply being so far away, the question is, could we hit 117 on earnings? So they're calling for 8. So if price were to stay right here, right now, that would be more than, that'd be like a 2 standard deviation for the idea of earnings for Disney. Okay. 2 standard deviations definitely do happen, and I do consider them a thing for earnings. It just kind of depends on what comes out of it. Okay. Next thing I want to do is reduce my time frame into a daily. Okay, and see if we can reduce this number from 117. Now I will tell you Again, 117 is definitely a longer term target for me as long as demand can hold. But I don't want to be too far out of the money on this idea. I want to, take average trading range into consideration when thinking about this type of methodology going into earnings. And if I haven't said so yet, all earnings, they're basically a 50-50. But what I found is that supply and demand is a kind of a go-to for any scenario. Supply and demand trading is by far the best trading out there, in my opinion. And if you don't use supply and demand, you're really, really missing out. Okay. So supply and demand, again, looking for where institutions buy and sell. They are the ones that are moving the market. And us retail traders, our job is to try to identify where these guys are buying and selling. Okay. And we do that by looking at the charts here and looking at formations and so forth. Okay. Now notice here we have another inside and down formation. Okay, right here. All right, and we can go ahead and identify that and go ahead and put supply here. All right, and we're going to keep the demand here because really, let's think about this. If price were to drop into demand around 96, that definitely falls within the idea that the market makers are right and we only get a plus or minus $8 move. Then I think we just fall back into demand, right? Into this area. So again, 89 and we're sitting at 100. That falls right within there. And the cool thing is we found that level before we had to look at, whether or not what the market makers think. Okay. Now, if this supply zone actually holds true, where does this put price? This right here is at 105 by 108. Current price is at 100. They're looking for an $8 move. This actually falls within the market makers idea of an 8 plus or minus move. Both of these. So what we're going to do is we are going to annotate that, right? To me, this is the best way to analyze stock going into earnings. Okay, so we'll just kind of write in here market makers um, expected move. And we can draw some arrows here. And let's do like this. Okay. Oops. All right, just like that. So this is your market makers. Okay. Now the question is, does trendy match up with the market makers? And a lot of times, I will uh, not match up with the market makers. And if I don't match up with them, that's where we get an outside move that really pays off. Those are my favorite. Okay, just to be very transparent. That's when I think that the prices of the options are underpriced. And if we get that two standard deviation move, then guess what? That's where I'm paying cheap and I get that outsized move and I get paid. Now, my overall methodology into earnings, the way that I like to trade these on a consistent basis is using debit spreads. Okay. The reason why I use debit spreads is because what you're doing is you're minimizing your risk, but still using the same strikes that you would typically use. And so you're offsetting that cost. Okay. And what I like to do is think about the overall market, so the macro market, kind of where it's coming into, take into consideration that Disney has dropped 55+% here, and think about, okay, but it's come into demand, and so far it's holding. All right. Now, this has been working out for what, 3 out of 3 so far, this earnings. And I'm kind of choosy on who I pick to trade into earnings. Disney is not my absolute favorite, but I feel like we may have a setup here, you know. And the idea so far this year that I've been using, and sorry for this quarter that I've been using, is in the short term, down back to demand, and long term, up here. So the first thing that I think about is I'm actually more interested in buying debit spreads for this area for long term. Okay. And short term, I want to be able to pay for these right here. So it has to make sense. Let me just give you a hypothetical. What I mean is if I buy call debit spreads for, let's just say 117 by 127, let's say that they cost $1 and the payback is, 4, just something like that. I get $4. So I'm risking $100 for $400. And in this case down here, what I would like to do is find this debit spread that covers these numbers in the demand zone. Say I buy them for 40 cents, okay? But my return is 250. So what happens in the short term is when price comes down to here, the 250 pays more than what I actually paid for my long-term calls. When price comes down into here, I take that money from the market, okay? Cha-ching, I make $250. I paid 100 up here. My net is going to be what, right? So you just take that from the difference. We make 150 bucks here, okay? And then when prices drop here, what I'm doing is I'm buying back the short side, okay? So remember, in a call debit, what I'm doing is I'm buying this call and I'm selling this call. When prices drop, we collect here, but this loses value. So what I do is this guy right here, I keep that, but I close this when we get in here. Now what I have is a longer term call position, and I'm relying on demand to actually work. And then over the long period, we get paid here as well. In theory, this is a free trade. Okay. This ends up being a free trade for me. All right. If I hit down here, I collect, and then over time, we move up here. And just to be clear, I don't necessarily have to move all the way up here. Okay. If over the next 2 weeks, price moves very quickly, I could be trimming or closing that position around this area. Okay. So the next thing I'm going to do is take a look at the option spreads. Okay. So I'm going to also think about timing. So two standard deviation, we know that they're only thinking about $8. It doesn't mean they're right, by the way. A lot of times they're wrong. We're thinking, this would take a little bit more time. What I've been doing this year is actually buying out quite a bit of time here. So like say January 23, so 73 days out for Disney. Okay. And if I think that they can hit 117 by 27, what I could do is buy the 115s and sell the 120s. Now, those are actually only costing me 95 cents right now, and they pay me out $405. So let's go ahead and write that in. This is my first idea, is long term, 20 January 23, and that's kind of crazy because earlier when I was giving you the hypotheticals, I didn't realize this would be a 1 to 4, but it's looking that way. So what I'm doing is 20 January and the 115 by 120 call and the debit, that means they're taking the money from you. Debit equals 95 cents. You might have to get in for $1 or something like that, okay? So that's what's going on there. Now let's look at this down here. The numbers are 96. So I'm probably, 96 by 90. I don't necessarily need to do that. And just really quick, I want to show you guys. Let's see. I'm actually going to this. Okay. And then over here on the short side, again, if this were to happen tomorrow or tonight or whatever, let's look at those numbers. So again, right here is about 97 to 90. So let's look at 97 by 95 just really quick. Those are 66 cents. And for 66 cents, this pays 134. So as you can see, for 66 cents and for 95 cents or 97, that's what I actually just paid, by the way. I went ahead and got in this, and my room's going to see that immediately because our my API is connected to my room. So about the 115 by 120 for 97 cents. Okay. And again, this is not a solicitation for you guys to buy or sell, just showing you my methodology. Now, for 66 cents, I can actually pay and I would get $135 back. So let's say that I'm right. And we go down here, and tomorrow morning, I collect $1.35. What does that mean? That means that this position is paid for, folks, right? I already paid for that. Okay. Now, in total, please understand that's really what I'm going after. Okay. So in total, for me, it's going to be 97 cents. Okay. Plus the 66. All right. That's what I'm going after. And I actually want to make this a little bit tighter. Again, probably something more like 97 by 96. They're 35 cents. And these pay 60. I think the 97 by 95 is probably the best bet. Give me 1 second here. I could also do 96 by 95. And let's see what those pay out. And those pay out $68 for those. And let me pull out my calculator really quick. And let's come in here and take a look at, once again, 96 by 94. Let's see what those pay. $141. That is probably about what I'm looking for there. Yeah, a lot of these things have been clobbered. And let's see, the 95 by 94s, which still is in the zone, pay out $74. Yeah, I kind of like this. And so these are going to be my two. Okay. So what I ended up going with, again, I'm not necessarily bearish or bullish. And just as a disclaimer, what can happen here, okay, on both of these is that you do only fall into the expected range. These go to zero. You make no money there. And then you still have your spread for here, okay, with time. So for me, if that scenario happens, if we do not pull back to demand, I lose zero here, okay, and I only paid 27 cents for that. And I bought the 95s and sold the 94s, okay. Again, looking for a drop into demand. Again, only 27 cents, okay. If we, those can go to zero. And if we just open up here, what I'll do is then go into my strategy in the morning, how we intraday trade every day. All right. And then look to add into my longer term trade and or just trade the intraday trade off of my PMZ trades. Okay. And you guys know I love trading the pre-market zone. So again, these are my expected moves. And I do agree with the market maker here and here. All right. And we found that by using formations, not by just directly looking at, a platform and going, okay, this is what they want. Because in my opinion, that's the best way to get run over. The best way to see which way price could move or how much price could move is the most important part in this journey. And I do see that this supply zone here, okay, has been tested. So let's zoom in really quick. This is the actual zone and it's already been tested. So what that means to me is if price moves up to here, it can break and we can see this. Okay. So I like this for how many days we bought out, and I like this for support and or as a hedge. All right. And that pretty much sums up what I wanted to go over with today going into Disney. And for the remainder of the time, we've had an amazing day. I think you guys know that. Melissa's done really well. Futures, you guys have done really well. I hope that you're having an amazing time out there, guys. Don't forget, if you have any questions, you can always reach out to me on Twitter at TR3NDYJON, Trendy John, or you can check out our website at trendytrading.co. We do have a trial that's for $5 for 7 days. You can see us trade live. And also, uh, once again, our alerts are patched into our API, which make it really nice and seamless. And so my time is spent more on the technical side and teaching rather than writing out alerts and so forth. Um, Hope you guys have a great day. Good luck to you, and we'll see how this plays out tomorrow. Have a good day.